The FBI had no idea. Regulators didn't suspect a thing. But buried deep inside billions of dollars of transactions, a machine saw something no human did. This is the true story of how a simple anti-fraud AI, designed just to flag routine red flags, accidentally uncovered a $500 million Ponzi scheme operating silently inside a legitimate business. In 2021, a financial firm onboarded a new AI tool for anti-money laundering. Nothing special, just standard compliance tech to scan transactions, check names, and alert the compliance team. But this AI had been built differently. Instead of just rules-based flagging, it learned patterns over time. Think of it as a digital auditor, one that never sleeps and doesn't forget. For the first 3 months, the AI flagged usual suspects: fake invoices, duplicate accounts, foreign transfers without paperwork. But then, something strange happened. The AI flagged a set of accounts. Nothing huge, just small dollar amounts, transferred back and forth daily. At first it looked normal. But the AI saw that the same 8-12 shell companies were circulating funds, millions, in a perfect loop. No invoices, no product movement, no payroll, just money in motion. It didn't look like fraud, it looked like someone trying not to look like fraud. The AI also noticed that every month, the companies reported stable, guaranteed returns to investors. That's when the AI's risk engine triggered an internal alert: high-risk pattern detected, possible Ponzi flow simulation. The internal compliance team almost ignored the alert. After all, it was just an AI guess, right? But one analyst decided to look closer. I thought the AI was exaggerating, but when I mapped the transactions manually, it matched the profile of an old fraud case I studied in school. The team dug deeper. Investors were real. Returns were fake. The company was paying old investors with new investor money. It was a textbook Ponzi scheme, buried inside a tech startup that no one suspected. Within 2 weeks, the firm filed a confidential report to authorities. The FBI launched a quiet probe, and within 4 months, the scheme was shut down. Over 2,000 investors were saved. Nearly $500 million in fraudulent assets were frozen, and the founders arrested and charged with multiple counts of wire fraud and securities fraud. This story isn't just about AI catching bad guys. It's about something bigger. What happens when machines see patterns we can't? What if AI becomes the first line of defense in the war against financial crime? The AI didn't know what it was looking for. It just understood the flow and realized that no legitimate business moves money in a perfect circle. This wasn't a movie. It happened. And as financial fraud grows more complex, the machines watching over it are growing smarter, faster, and more precise. One day soon, we may trust AI more than humans to protect our money. Subscribe for more real stories of AI and finance.